was just listening when they asked me how about my accounts and plans. But I have said I have nothing because I don't even have a savings account. I just have a piggy bank out there. Dad, can you introduce it to me, please?
Yeah, sure. Just wait a minute. Here, take a look. The suitable passport. I hid it as a remembrance of my teenage days.
What is this for,
It is for account that is who have a low transaction value. It lets you earn an interest. The simple rule of using a passport is you must visit your local branch with your passport for all deposit and withdrawals.
Wow, Dad, this is amazing. And you are too. I also want to have a passport like yours, Dad.
Yes, dear. You can also have it. Even your little brother can have it too. Because the banks nowadays are introducing kiddie savings passport.
That's cool, Dad. At just a young age, we can start saving money to secure for the future.
Yeah.
Dad, how about that? Is that the thing that you insert in the machine at the mall that will release money? An ATM card?
Yes. This is the automated teller machine card, or also known as ATM card. That's a more convenient way to access your account. You just need to follow the steps posted in the site, and the money will gently go out from the machine.
Wow, that way is too cooler, Dad.
And that goes with only one type of account, the savings account.
Savings account. The simplest bank account is the saving account. The business deposits money in the bank for safekeeping. The account earns minimal interest and may have a minimum balance requirement. Checking account. A checking account is like a savings account with an added feature. The depositors can issue bank checks. Bank check is an acceptable form of payment. It allows depositors to pay large sums using one sheet of paper instead of carrying currencies. Also, bank checks provide additional control feature that prevent misappropriation of cash. A payee can be specifically named such that no other person or entity can use it. Moreover, a check can be crossed or restricted for payee's account only. This means that the check will only be accepted for deposit to the payee's bank account and cannot be encashed over the counter. Time deposit and investment account. A time deposit or term deposit is a deposit with specified period of maturity and earns interest. It is a money deposit at a banking institution that cannot be withdrawn for a specific term or period of time. When the term is over, it can be withdrawn or it can be held for another term.
So, are we required to have that kind of account?
Not mandatory, but we should have it, my dear, for the reasons of security. When you deposit money into your bank account, the bank will store your money in the secured vaults. The second is convenience. When you have a bank account, you are able to access physical cash wherever there is a bank branch or ATM. Alternatively, you can also pay for goods and services electronically through a debit card, which is linked to your bank account. Having a debit card also allows you to shop online, which gives you greater access to a variety of products from around the world. Third is earning interest. Having a savings account that earns interest protects you from inflation and declining value of money. Having a bank account allows you to better manage your saving and spending habits. Interest is also a source of income and encourage people to save regularly.
Wow, now I understand what was my friends are talking about a while ago. I am now able to discuss with them. Thank you, Dad.
It's with pleasure, dear. Oh, by the way, gotta go. I have to go to the bank to deposit and update my bank statement because I have not received it yet.
Can I go with you, Dad? Please.
What a nice idea. Go fix your things and come with me to the bank.
Just a minute, Dad.
Okay.
Ma'am, what are you doing here?
I just want you to become familiarized on how or what is the basic process happening inside the bank.
Oh, that's a good timing. That's the topic of my friend a while ago.
Oh, you're talking about banking and savings? It's nice. So let's come inside and I'll show you something.
Ma'am, what are those?
Those are different fees that bank uses on their transaction with the payees.
But they are different. Are they symbolize something?
Yes, Romy. This is the deposit slip, withdrawal slip, and payment slip. Deposit slip is sometimes used to deposit funds into a bank account. A deposit slip indicates the date, the name of the depositor, the depositor's account number, and the amounts of checks, cash, and coin being deposited. There are two kinds of deposit slip, namely cash deposit slip and check deposit slip. Check deposit slip, the depositors will indicate the amount of check, check number, and issuing bank. On the other hand, the depositor is required to indicate the denomination of the cash deposits. Just fill the information asked for this form. Then go to the counter and give it to the bank teller. It only takes a minute for the amount of your desired deposit will be transferred to your account and validated.
So, how about this red slip? Withdrawal slip?
Withdrawal slip. Withdrawal slip documents the withdrawal from a passbook account. It is a bank form filled up by the account holder. It indicates the account name as well as the account number from which account of account holder wants to make a withdrawal. Unlike in deposit transactions, only the account holder may withdraw from his account. Therefore, the signature of the account holder is required in the withdrawal slip. The bank will only release the funds after verifying the authenticity of the account holder's signature. Just fill out the information asked for this form. Then go to the counter and give it to the bank teller. It only takes a minute for the amount of your desired withdrawal will be given to you after your slip is validated. Another one is the bank checks, like this one. Bank checks. It is a bank form filled up by the account holder that instructs the bank to pay the designated payee indicated on the check on or after the date specified on the check. The check expires 6 months from the date of the check. There are 3 types of bank checks. This one we have is a personal type of bank check. Personal checks are issued by person, a single depositor or holders of joint accounts. A personal check may have 2 signatories if the account is joint account. Another is corporate check is issued by corporation, is more secure than a personal check. Manager's check, it is issued by the bank in behalf of client. MC is taken to be the most secure among the 3 kinds of check. But the color of the forms varies only to the bank. They can change it or assign color for each slip.
So that's how it works, ma'am. Thanks for sharing me. I think I am in a adolescent stage now.
You kid, just wait me here and I'll go to the counter and deposit your dad's money.
Okay, ma'am.
Just sit there and I'll be back. Okay?
Uy, Rom! What a small girl! You're here with your mom too.
Yes. We talking to the bank teller.
My dad too. And say what? Introduce to me the types of bank accounts.
Wow! The same with me a while ago. She's telling me a different type of bank slip.
Wow!
Hey! You two seem amazed and happy with your convo.
Yes, Lee. We're actually talking about the things you introduced to me a while ago. Saving her mom too.
Ah, that's nice. So, are you with your mom too?
Yes, Tito. She's there talking with the bank teller.
Oh, okay. So, let's just wait for her mom so we can go up over there.
Okay, Dad.
What's that, Tito?
This is a bank statement.
What is a bank statement, Dad?
A bank statement is a detailed transaction history of your account. It is a list of all activities that your money goes to.
Ah, for you to able to check or validate your transaction.
Yes.
So, what are those listed and words in the paper, Dad?
Okay, let me briefly discuss it later.
Here in my bank statement, in upper left part is the bank name, the bank branch, and bank address. In the upper right is the account number and account name. Below is the summary of your transaction history that consists of beginning balance, total deposits, total withdrawals, and closing balance. So, let's go with the description of the transactions for you to understand each label. The first one is the beginning balance. The opening balance is the amount of funds in a company's account at the beginning of a new financial period. It is the first entry in the accounts, either when a company is first starting up its account or after a year end. Next is the deposit, a transaction involving a transfer of funds to another party for safekeeping. Check payment. A check payment is a negotiable instrument drawn against deposited funds to pay a specific entity of a specific amount of funds on demand. Cancelled check. A cancelled check has been paid by the drawee bank and endorsed by the payee. Cancelled checks can also be used as proof of payment. Auto debit. The person who directly draws the funds instructs his or her bank to collect an amount directly from another's bank account designated by the payer and pay those funds into a bank account designated by the payee. Auto credit. The account holder can designate his savings or checking account as settlement account for his investment transaction with the bank. The account holder may instruct the bank to deposit his interest income from his investment transactions to his savings or checking account, referred to a settlement account. Return check. A check that is not paid by the bank on which it is written. Often, the reason a check is not paid is that the account on which the check was drawn did not have sufficient balance. In that case, the check is returned as NSF or not sufficient funds. Bank fees. Fees include for bank checks, account maintenance, internet fees, and other services the bank may provide.
That is too detailed. Perfect.
Yes, through bank statement, you can actually detect the unusual activity or transaction that's happening to your account. They can send it to you via courier or online, but I prefer to get it physically at their branch at the same time. Actually, I'm depositing your mom's money.
And that's through the security assistant of the house. That's incredible.
Romy, ay wait lang.
Let's go. Let's go.
Hi guys!
Hello. We just saw each other yesterday.
Well, that's our work so small.
Oh, you just met yesterday without informing me? I'm jealous about that.
No, Ate Joy, it's just an accident, right, Bar?
Yes, sis. We just accidentally met at the bank yesterday. Don't be jealous.
Just kidding, you know. By the way, I have something to tell you.
Wow, sounds exciting.
Spill it out, man.
Well, I'm just scanning some old books of my sister yesterday. Then, I saw the lesson about the bank reconciliation, and since I also remember the topic of our group yesterday is all about banking.
Reconciliation? As in, to be compatible with?
Yeah.
To be compatible with the bank?
Oh, looks like it will be easy for me to discuss it with you, huh?
Bank reconciliation is a procedure determining whether a cash record agreed with our inventory of the cash in the bank. It is the procedure to reconcile the unadjusted bank and book balances to the correct cash balance. Note that no adjusting journal entries are prepared for the bank side. This is because we are only responsible for the maintaining of the accounting books of the company and not the records of the bank.
Ah, I get it.
Yeah, and there are different kinds of reconciling items, and these are classified into the timing differences and the errors.
First, the reconciling items that result from timing differences occurs when transactions are recorded on the bank's and the company's accounting books at different dates. The timing differences have two categories: the reconciling items on the bank side, and the other one is the reconciling items on the book side. Under the reconciling items on the bank side is the outstanding checks. Outstanding checks refer to the checks issued and delivered to the designated payee but has not yet cleared the bank. The correct adjustment is to deduct the amount of the outstanding checks from the unadjusted bank balance. Another one is the deposit in transit. It refers to deposits that did not meet the bank's cut-off time and is not recorded in the bank statement until the following period. The other category, the reconciling items on the book side, define the following:
Collections received directly by the bank are added to the unadjusted book balance. Debit and credit memo refers to additions and deductions from the account that were not instructed by the depositor. The unadjusted book balance is adjusted for debit and credit memo. NSF or non-sufficient fund checks are checks dishonored by the bank because the balance of the issuer's checking account is not enough to cover the amount of the check. It should be deducted from unadjusted book balance. And lastly, the second type of reconciling items is the errors. Errors are unintentional mistakes. It should be carefully analyzed to determine the proper adjustments to the bank reconciliation. Bank reconciliations are an important accounting procedure performed by the companies of all sizes to match the cash balance of the bank with the balance found on the company's financial records. Although bank reconciliation is typically a month-end procedure, companies with smaller cash resources might perform it daily.
So that's how bank reconciliation works.
At first, it sounds like a complicated thing, but when you already finish explaining it, it seems easier to understand.
Yeah, that's right. Another meaningful and awesome things that I learned today. Thanks, Ate Jen.
It was just yesterday when I was so clueless about the basic banking systems, leaving me so out of place in the conversation together with our friends.
But now I think we have enough knowledge to say the things that I think they are doing.
You're right. It's payback time to share some knowledge.
They just updated that we'll meet in the field, so what are we waiting for?
Let's go!